Hi, hello, Dr. Stock viewers. Welcoming you all after a very long break. So, the reason for the break will be revealed to you very shortly. So, things are going to change in the way how our company, Dr. Stock, is working, and we're going to emerge it as a new company very shortly, and things are in place. So, we are making a digital transition in short to what are the activities we are doing. So, we are in pipeline to that, and we are doing some R&Ds to make sure that we are coming big. So before going to that, so why we are here today? So I'm going to speak about a scenario which on how recent times all the retail players are getting struggled and getting trapped on companies based on IPO. So when actually to book IPO and when to wait for IPO allocation and when to book on the stock, when it is going to turn into loss and when it is going to be turned into profit. So, what are the things we're going to see here? So, what is the actual reason for a business to uh, go up after IPO, and what is the reason for a business to go very back? For example, the stock is going 1,300 after listing from 700 or 800 rupees, and again it is coming to 550 rupees. So, what are the reason for all these things? We have a classic example which is in front of us. There is a slight disclosure for this right now. So, we are invested in this stock, and the analysis made personally for my own investment and my family analysis. So, it's not an advisory or it is not a buy or sell call at this moment. So, let's go straight away to the analysis. So, everyone knows there is a company called Medplus. So when you see anywhere in Tamil Nadu, when you step out, for every 10 kilometers or every 20 kilometers, we have one shop which is called Medplus. Is it worth holding this stock, or is this stock is running on manipulation? Means that it is failing to satisfy investors' need. Let's go to see that detailedly one by one. So let's start from the day when the IPO is analyzed. So means that it is already sealed with a public business or a private business and it came open to a public entity. Means that they are coming out of their home place. Means that they are coming public. So everyone who is holding this stock is considered to be a owner. That is the first and foremost thing the company need to understand. Moving on. So company is actually making a journey in the time 2021 of December 13th to December 15th for the IPO listing. So it's a date where the IPO is done, and post that the listing happens on 23rd of December. So the price of this stock is 796 and the lot size is 18. Moving on. So invested amount initially it's 796 for 16 stocks, which is coming close to 14,328. As a short-term investor, we have 50% we have 50% of this stock already done on 1 month of the listing. So that is the place where most of the people left this stock. Means that all the HNI or almost many of the people left and the company also went to pledge. I will show you one by one the reason behind the share price fall to 550. So who are the trap here? All the retail traders who took the positions during IPO and they have not booked when it is made a high of 50%. Why we have not booked? Because of our short-term investor reason. So when we book it, right, so we're going to pay tax when you are booking within 1 year. Our tax attraction will be slightly higher when we go for LTCG. So it would be 20% and this is going to be higher than that. So that is the reason we are not booking. And moreover, the next important point, what happened? So are we retail investors, are we failing or are we mad enough to hold this stock? So how many of you have that patience? I'm not sure. So this is going to be my worst loss so far in a IPO. So that is the reason for this video. So I want everyone to not to fall under trap like this poor company. So let me put it very simple about all this journey of this company, how this company is cheating people one by one with their fundamental things very openly. I'll be putting to you in a short. Meanwhile, what this company did, let's assume that we are a retail investor. We invested 14,328. So we actually lost our patience because the stock price went to 550. Fine. So it is an 18th month journey and we holded it very patiently for 3,900 rupees loss. Almost, I can say 30 to 40% loss. So hold it patiently. So what happened because of this holding patiently? Yep, I might be one of the 100 investor who holded this stock, or I might be one of the 1,000, or I might be one of the 1 lakh investor who holded this stock patiently. Yes, I holded it patiently. What happened actually? Yes, the patience now converted to a 10% profit from now. So it moved to 870. From 550, I mean, from 800, it moved to 1,343. It moved to 1,343. I can say it's happened very close to January 2022. So after that, the stock went back to 550 before 7 months only. From there, it is clearly down cycle. Now again, the stock is recovering. Will it recover back very super or will it fail from here? For that only, we are here to see the analysis. So as this company trapped me as a retailer, I want to give you all a very clear scenario on why this company is still in trap, why it is going to fail. Let me put it very simple. This company is going to make 1,200 rupees for sure. But still, after that journey, it is going to fall like anything, or else within 1,000 or within 900 or within 930, this company is going to fall like anything. If this company need to recover or you want to invest in this company, what are the steps you need to do? All these things we are going to see one by one. So now already I lost 30% on holding this stock patiently, and right now I'm into 10% profit. So will I exit now or when I will exit? That is what we are going to see in this video in detail. Medplus is a stock which disappointed me specifically for almost 18 months from the listing date of 23rd December 2021 is the actual story. So So let's come to the direct business of the company. So what this business the company is doing, it is selling medicines. So it is actually a competitor for Apollo Pharmacy at this moment. So if you take Apollo Pharmacy's share price, out of which 20%, the value of, for example, Apollo, right now, I'm not sure about the Apollo uh, hospital's stock right now. In that, 20% of the value is the one you have to calculate. That is actually the competition business for Medplus and Apollo. So let's assume that it is 5,000. 20% of it would be 1,000 rupees. So that would be the journey of valuation for Medplus and Apollo. So that is how you have to go. So it is almost close to 1,000 rupees valued company at this moment. Will it worth? Is it worth to pay 1,000 for this company? Definitely no. This company is not worth to pay 400 to 500 also. Then why it is going to 890 or 870 right now? Let me put it very simple. It is all cooked up data. I don't know how this is getting played. Let me show you all the fundamentals of this company. As a value investor, what we need to do, let me put it in a very simple way. That is what I'm going to follow. Now, this company, let me put it very simple. We don't have any new brokerage updates. So we had before 1 year almost. Before 18 months only we had. During this time only the stock hit 1343. After this, from here stock reversed. First and foremost thing. This is what the data where every HNI will see. So right now we are moving into HNI category. We are analyzing on this. So this is going to be zero now. So that is done. Moving on to the things from the basics again. So when you go to the promoter holding, pre-issue shareholding is 43%. Right now it is gone, I mean, after post-issue, 40.43. So this is from 23rd December 2021. The listing date happened on 23rd December, okay? So it is now came to 40%. It is actually a flaw. Every company which is going good business need to have higher than 40%. Sorry, higher than 50%. There is a 10% drop here. Fine, accepted. Company's financial, fine, accepted at the moment. As of now, before 18 months, I'm saying, okay, I'm not going to analyze the current. company fundamentals on financials, but I will try to check other parameters. All this is good as of now. Let's go to the other fundamental factors. Why this company is overvalued or why it is not worth the price. First, it is 870. Let me put it very simple. It is 870. See the promoter holding, it is 40.4 from last 18 months. What is the pledge? Almost 20% is pledge. So right now, out of 100%, 80% is almost with retailers, or I can say almost out of the company. Okay, only 20% has been held by the company only. Let's see who are the investors in this company. See, promoter is very, very less. So FIS is holding only 4%, DIS is holding 28%. So that is the reason for the rally happening in the stock. And see the public is started to reduce very clearly. 28% people offloaded to 26.42%. That too, you see, very big HNI are only sitting here, only 18%. When you see public, people know very clearly they moved off. Very clear publics, they moved off. So what is the problem here? FIA started to increase, DAA started to increase. So do you think will all these things will work? No. Let me put it one more point as well. See the price to earnings of this company. It's very, very high. Anytime when a company is going to be available cheap and doing good business, this value need to be below one. So it is almost 63 times higher valued than its earnings. Next, company's debt. It need to be always below one. Well and good, it is below one. But still, the company need to reduce its debt for more than 20 to 30% from here. So this need to come minimum 0.3 or 0.5 for a company like this, because this is having something like a stock and they are selling like a medicinal tablet stock company. So this should not have that much depth. So they're doing like a trading here. They're buying from a pharmaceutical company and giving. Why this company need to have this much depth here? So this is a company where we should they're doing a kind of a trading. Why should they have this much depth? That should be always need to go to zero. See the company like DMart here. They're also doing the same kind of trading, but they're doing in FMCG. They're doing in medical. So see the business they are doing. Interest coverage ratio, it's very, very less. Means that the company is not having that much cash. Again, that is a critical thing. And ultimate Z score is fine. The company is not going to bankrupt at this moment. When this is coming below 3 only, they will go for a bankrupt. Return of return on capital employed, very, very poor. Only 5.63. Means that the company is not planning its capital in a very good way. Very, very, very poor. Return on asset, very, 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 very poor. It's 1.86. Very poor. This need to be improved for more than 3. See the company trend. See the company Avani Supermarket. Current market price to sales, okay at this moment. I don't want to comment on it. See the valuation, P 208.66. Very worst, overvalued company at this moment. See the market cap, fine. Market cap is fine. It's like this deciding small cap, mid cap, or large cap. That is fine. See the equity cap. Equity cap is very, very less. That is also one of the advantages. So this company might double also. The risk is there. When the equity cap of a company is very less, comparatively below 50 or below 10 crore, all these things, there is a high chance that doubling price will take very easily. And current market price to book value, slightly higher. This need to come below 3. And dividend yield percentage. So far, this company has not given any dividend. So this is going to be another black mark for the company. Means that they are not interested in investors mindset. They do business, they make profit. Why they're not caring about investors? So a pure investor who is ready to invest his money only for business and only for growth business should definitely avoid this company. Next, enterprises value to EBITDA. Okay, at this moment, I don't want to comment. So, return on equity, very, very, very poor in this category. So, I don't want to compare this business right now with Apollo. That is, this business is not worth to compare with them. So, putting 20 kilometers one shop will not work. That is what this company is saying. And putting different advertisement, giving 20% for 1,000 rupees purchase and doing all these things, going forward very clearly, this company will surely lose its elite customers. Elite customers means in a shop They're buying for more than 5,000 or they're buying for more than 10,000. Going forward, if the same things are happening, they're opening only shop and they're not concerning on the services, then for sure this company will come into a very drastical downfall. So moving on with the technical aspects, all the fundamental aspects are so far 0 to 5 out of 100. Let's go to the technical. This is the technical aspects of this stock. What things are happening in technical? Yes, fundamental is different, technical is different. So technical is something like you will just blindfold your eyes and you will see the chart and you will put the money. When you are a fundamental come technical investors, you will not blindfold your eyes. You will just open your eyes and see whether this technical things are getting justified with fundamentals. So now, what is happening in this stock? It is forming a round bottom as per technicals. So what is going to happen? It is going to touch 1,300. So that is the reason why this FII and DIA are staying in this stock. Means that pure mutual players, mutual fund players are there in this company. No one else is there in this company. Fine, you know about mutual funds. Every 3 months, they are doing exit and entry. And as a fund manager, only fund manager will know that. The people who are holding the mutual funds will not know that where they are exiting and where they are investing. So again, a trap for people since only 8% of the public is right now with this company. So we need to be very, very careful. And out of this 8%, I am also one among them. And my family members are among two. So I can say out of this 8%, we are almost close to 2.5 people right now. So what to do with this stock right now? From 796, it came to 870, right? So you make a plan and try to exit this stock at 900 or 950 max. It will go to 1,050 or not for sure, I don't know, because it struggled. This place only, it struggled a lot. After touching 800 also, it struggled a lot to come back. So best advice, what I am going to follow right now is, I will try to exit my capital. So I will, from 16 stocks, I want my capital safety. So I will exit all my stocks. And still, I want to see what this company is doing. So I will give a chance. I will stay invested with one stock and see what this company is going to do. I will come back with another video after this company is making a crash after making 1,300 or doing blah blah things. If still the company is not improving this uh, pledge and it is cooking up some things, again we will come back with a video since we are still holding at least a piece of a company like one stock. As soon as you come to public, you have to address all these things. So our next study will be on a company which is again a South Indian based company. They are into uh, satellite network and they are going into a very good phase and they have changed a lot of things in their ownership. They have changed a lot of things in their viewership and they are trying to make different things in their program glitches. We will come up with that video shortly. And again, there is a small disclosure about that and this as well. Both the stocks we are owning and all the analysis is for us. Why are we sharing here? It is to show how a public need to be safe or trapped. Kindly take a valuable decision of what is required and what is not required. So see you all with yet another video. Thanks. Bye bye.